Hey there, investors! Whether you're just starting out or you've been in the game for years, there's always something new to discover in the world of finance. Have you heard about QDTE? It's been making waves lately among savvy investors who are looking for reliable income and long-term growth. QDTE is an ETF, which stands for Exchange Traded Fund. If you're not familiar, ETFs are a popular way to invest because they let you buy a collection of different stocks or assets all at once, just like buying a bundle instead of picking out each item individually. Imagine an ETF as a basket filled with a variety of stocks. Instead of buying each stock separately, you get exposure to all of them in one simple purchase. QDTE's basket is special because it focuses on companies that pay out dividends, those regular cash payments to shareholders. Dividends are like cash rewards companies give to their shareholders, usually every quarter. It's a way for companies to share their profits with the people who own their stock. So when you own shares in a company that pays dividends, it's like getting paid just for holding onto your investment. That's extra money in your pocket on top of any gains from the stock price going up. QDTE specifically invests in companies known for their high dividend payouts. These are often well-established businesses with a track record of rewarding their shareholders. This means you could enjoy a steady stream of income and potentially a bigger slice of the profits over time. If you're looking for a way to grow your wealth and get paid along the way, QDTE might just be the powerhouse you've been searching for. Sounds good, right? Let's dive in and see how it works. ETFs, or Exchange Traded Funds, have taken the investing world by storm, and it's easy to see why so many people are drawn to them. Whether you're a beginner or a seasoned investor, ETFs offer a simple, accessible way to get started in the stock market without feeling overwhelmed. Think of ETFs as the easy button for investing. With just a few clicks, you can own a piece of dozens or even hundreds of companies at once. No need to research and pick each stock individually. Instead of putting all your eggs in one basket by buying a single stock, ETFs let you spread your money across a wide range of companies and industries. This diversification helps reduce your risk, so if one company struggles, your whole investment doesn't take a big hit. It's like having a built-in safety net for your money, giving you peace of mind as you invest for your future. Another great thing about ETFs is how easy they are to buy and sell. You can trade them throughout the day, just like regular stocks, using your favorite investing app or online platform. Plus, ETFs usually come with lower management fees compared to mutual funds or picking individual stocks on your own. That means you get to keep more of your returns instead of paying high costs to someone else. In the end, ETFs make investing more affordable, more convenient, and less stressful, so you can focus on growing your wealth and enjoying the rewards of smart financial choices. Now, what makes QDTE stand out from the crowd? It's all about the dividends, baby. QDTE hunts for companies that consistently pay high dividends. These are typically well-established companies with a track record of sharing profits. Think of it like owning a piece of a money-making machine. QDTE's strategy aims to deliver a steady stream of income to investors. This can be especially attractive for folks looking for regular cash flow, like retirees. Like any investment, QDTE comes with its own unique set of advantages and disadvantages. It's important to weigh both sides carefully before making any decisions. Understanding these factors can help you make a more informed choice and avoid surprises down the road. On the plus side, one of the main attractions of QDTE is the potential for high dividend payouts. These dividends can be especially appealing for investors who are looking for regular income, such as retirees or those seeking to supplement their earnings. Receiving consistent dividends can provide a steady income stream, which can help cover living expenses or be reinvested to grow your portfolio even faster over time. This compounding effect can make a significant difference in your long-term wealth. However, it's crucial to remember that dividends are never guaranteed. Companies can face financial challenges or shifts in their business strategy that may lead them to reduce or even eliminate dividend payments at any time. In fact, companies regularly review and sometimes change their dividend policies based on their performance, market conditions, or future plans. This means your expected income could fluctuate unexpectedly. Additionally, the value of your investment in QDTE can rise or fall just like any other stock or ETF. Market volatility, economic shifts, and sector-specific risks can all impact the price of your shares, sometimes dramatically. That's why it's essential to thoroughly research any ETF, including QDTE, before you invest. Look into the fund's holdings, past performance, and management strategy to ensure it fits your needs. Most importantly, make sure QDTE aligns with your personal financial goals, investment timeline, and risk tolerance. Consulting with a financial advisor can also help you make the best decision for your unique situation. Happy investing!